Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's take it one step further. Gene Munster, managing partner, co-founder for Loop Ventures, really one of the leading voices on all things technology, really for the last 25, 30 years. We appreciate getting a few minutes of his time. Gene, I'm just going to speak for myself, but I probably speak for most of my radio and YouTube audience. I did not know what DeepSeek was before this morning, but now I'm learning. What should I be learning? What should my takeaway be today?
I think that the highest level, this whole chapter is about, the first takeaway is that investors are nervous that this 85% move in the NASDAQ over the past couple of years has created an environment where any sort of ripple in what that AI trade looks like is going to cause a significant impact on some of these valuations. So I think this is a temperature in terms of where the market is at. As far as kind of the company itself is concerned, DeepSeek, what's most important here is that they are advancing or presumably advancing the cost of training these models. You've talked a lot about it on the show today. And why that's important is there's a question about how much hardware is needed for that, and that obviously impacts the big hardware companies, and then separately, how does that accelerate the adoption? So there is, the truth is always several layers below the surface, and I think when it comes to DeepSeek, there are still some pretty significant unanswered questions, and I'll start with one of probably the biggest one is that this $5-6 million training number that has the market upside down today, that was not their most recent model. They have an R model. It's unclear. Maybe that was $25, $50, $100 million to train it. It probably was below what the most recent version of OpenAI's model, which is anticipated or estimated to be about a $500 million in terms of trading. So I think big picture here is that how we are delivering AI is evolving, and there may be some pretty significant improvements in terms of the ability to do that at a lower cost.
So to that point, Gene, how much, if we look at Nvidia in particular, it's down about 283 points. What part of that is justified?
So I think the big picture here, I think that this is an overreaction. I think it's when you look at a company like Nvidia, it's a company we do own, and I think that this is an overreaction. And just specifically around that, if we can kind of zero in on this concept that these models are becoming more efficient, let's just take DeepSeek at face value that they've had some sort of an improvement, is that that improvement, if you believe that the U.S. tech companies are competent, that improvement is around some architectures that have been talked about for the last couple months. So those companies, the big tech companies, the companies that are behind all the announcements last week, Meta increasing their CapEx spend, and I think that is all that is a belief that they still need this hardware. So when it comes back to AI and it comes back to the Nvidia trade, is that I believe if they are reducing the costs to train these models, that I actually can build I think a credible case that could increase the demand for some of this hardware. If we are getting closer to general intelligence, if that potential is even closer, there's just going to be an insatiable arms race that's going to continue. And so I understand why Nvidia is down today. I think it's actually a healthy thing, but ultimately I think that their business is going to be just fine. We have to wait 21 trading days before we hear from at least Nvidia on that, but I think it's going to be fine.
So, Gene, was it a coincidence that on Friday, Meta ups its CapEx forecast dramatically, which by a magnitude I've never seen, from $50 billion to $65 billion, and then today we get this news on DeepSeek. Was that kind of, I don't know, coincidence?
I think that's just purely coincidence. But I do kind of go back to what we were just talking about a minute ago. Is I think it's important to note is that announcement from Meta, if you assume Meta is competent, and I believe that they are, that announcement came with the full knowledge of what DeepSeek was doing. So it's new to most of us today. But for these companies who have been making these huge investments, the concept of what DeepSeek had been trying to build has been, they've had a model that's been out. This has been something that's been aware for the last couple months. And so I think that is important, is that I think, again, that this commentary on Friday from Zuckerberg about the increased CapEx factors in some of these potential breakthroughs that we've seen with DeepSeek. I want to stop short of saying it's definitively a breakthrough. There's a lot of unknowns around how good the models are and what the true costs are. But I think that the AI investment phase is still alive and well. This is still very early.
So if this could be an overreaction, we don't know. Fair enough. Nvidia, obviously an overreaction, the stock, the way you look at it. Does it make you think, though, a rating of 41 times estimated PE?
So from where my head's at and thinking about calendar 26 at this point, and based on the calendar 26 numbers, I think it's closer to like a 25.
Okay.
And I think that they can grow earnings more than that. This is where basically the rubber hits the road, is that ultimately what happens in calendar 26. All the stuff we're talking about with DeepSeek today really impacts Nvidia in 26. And if in fact this dramatically changes how the kind of hardware that people need, less hardware, then I'm going to be wrong. But if this does create this accelerated arms race, then I think that they're going to grow faster. And so I consider a one peg on that 26 earnings as actually a attractive valuation relative to the rest of the group. So I'm comfortable with the valuation.
Just a red headline crossing the Bloomberg terminal as we speak. DeepSeek says it is subject to large-scale malicious attack. So that's a headline. We'll have more reporting on that going forward. Gene, just real quickly, we're going to hear from some of the other big tech companies, Microsoft, Meta, Tesla. How do you think they're going to address this issue?
It's obviously, this is going to be front and center, the A topic. And I think they're probably going to address it by saying they still have plans to invest meaningfully more in calendar 25 over 24 when it comes to CapEx. And I think that will play part of reassuring. We're a long ways away from that. We got 2.5 trading days away before we start to get some of that commentary, before the mic gets turned over to the other side of the equation here.
All right, Gene, thank you so much for joining us. I know you're super busy today. Appreciate getting a few minutes of your time. Gene Munster, managing partner, co-founder, Loop at Ventures, taking a little bit of a longer-term view and a more broader view of what this can mean for the industry.
You're listening to the Bloomberg Intelligence Podcast. Catch the program live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's get more on this tech sell-off here. Kim Forrest, founder and CIO of Bokeh Capital Partners. She's also a former chips person. Like, she did the stuff, so she knows the things. Clearly, the DeepSeek news is upending most of the tech industry, right? You get the SOX indexes down hard. You get all the hyperscalers are down hard. All the chip makers, all the power makers are all down hard. Is this the reckoning, or is this a buy the dip moment?
Well, that is the question, isn't it? I would say it's a little bit of both. I think this is a good level set, re-leveling, resetting our expectations. So the first thing is we have to really see if this is true. Now, apparently the company is open, DeepSeek is an open source company. They have released how they've done this. But, you know, replication is key. So we're going to have to see if this actually works. That's thing number one. Like, don't get too upset about major developments until you know that they're real major developments, right? So that's thing one. Thing two is, and I think this has been troubling me for a very long time, especially with like last week's Stargate announcement. It seems as if people have been expecting AI, which we don't know what the payoff is yet. We have a pretty good idea. It might help us out. But we're going to cover the earth, essentially, in data centers and use far more power than we create right now. So those two things are kind of troubling, that people have been making investments in companies going to produce far more than they can produce now. And do you see what I'm saying here? We had these really big expectations, and I didn't think that they were going to come to happen in short or long term because of the, well, physical limitations of it.
So, Kim, at this very early stage, I think I'm probably representative of most of our listeners and viewers had not heard of DeepSeek before this morning.
Sure.
And so that's calling into question kind of what we think we understood about AI and its implications, not just for technology, but for the stock market in general. My only question that I think I have now that has any relevance is, do I have to rethink my spending associated with AI?
It depends on how long your time frame is. If it's the very short term, probably not. You'll get rewarded because, well, orders are in and all that kind of good stuff. And by short term, I'm talking a year. But let's say 3 to 5 years, maybe. And why is that? Well, if we can really train models more rapidly with less input, which is a good thing, right? Where were we going to get all this electricity? That was like my biggest question. But anyhow, back to your question. I think, this is part of being an investor, is understanding how long was I planning on keeping this. Mm-hmm. So that's part of the problem. We have 2 more problems that are not being clarified by DeepSeek. One is, and remember, I used to do this, so I'm way down the road from most investors in thinking about things. But as I use it, I'm not getting the results that I need. And by that, I mean, it's not right enough. The error rate that I get back from the questions that I'm asking are anywhere between 5 and maybe 30%, which that's huge. Like, I can't just use AI, I have to babysit AI. So these are problems that aren't solved by anybody at this point. And then there is, how are we actually going to use it? I think there was, a Bloomberg report that was saying that probably 200,000 people could be laid off. Those lower level entry level people into finance, and then that mid-tier that are now, kind of like the AI for investment banking and equity research. But if we were that wrong, we wouldn't last, right? Like, if you're 5% wrong in investment banking, your career's really short. So, these are problems that aren't being solved. Mm-hmm. So that's another issue for investors. How long is it going to be till these get right enough to replace a person?
That's such a great point, because I was also reading an article that talked about the limitations so far that have been seen about what is it? DeepSeek. I want to say GeekSeek. I don't know what that was about. DeepSeek was its lack of inability to discuss Xi Jinping or to give real answers on Tiananmen Square. Just those topics that are near and dear to China's heart. And that's in part some of the issue that you're talking about. So who wins in this right now?
Who wins? Well, I think investors are losing in the short term. But if you, like me, think that AI is a path to productivity, and productivity always wins, I think you could be a winner. I think maybe companies like OpenAI and Microsoft, by dint of investing in them, and then everybody else who's developing AI, they might be winners. Maybe the what is it, Stargate? I don't know why I can never remember. That's my hiccup here. I can never remember that.
Fun names.
Because it has nothing to do with stars or gates.
Yep.
But Stargate might be the loser in those people, because we're not necessarily going to need to cover the Earth in data centers, right?
Yep. All right, Kim, thanks so much for joining us. Always appreciate getting your perspective, your technology background. Kim Forrest, founder and chief investment officer of Bokeh Capital Partners, joining us from Pittsburgh via the Zoom thing.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Monday, everybody. Alix here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube.com. We clearly have the tech sell-off underway, really concentrated in certain names. The Mag 7, obviously Nvidia, the chip stocks, although Apple's up, I should say. But Nvidia obviously getting pounded, the chip stocks getting pounded as well. So we wanted to continue the conversation about AI, and you really need to rethink this investment thesis. Joining us now is Pantony, Pantony. He's CEO of Boosted.ai. Now, the company has helped dozens of investment managers whose AUM totals over $1 trillion and how to implement machine learning in their portfolios. First off, Josh, have you seen this new GeekSeek? Why do I keep saying GeekSeek? It's not GeekSeek.
DeepSeek.
DeepSeek. This is not fair to me. Have you tried it? Have you tried DeepSeek? Have you talked to your clients about it? What do you think?
Yeah, so I mean, it came out, I think, last Monday. We've already ran a whole suite of benchmarks against it, tried out a bunch of things, and I'd say we're pretty familiar with it. I think it's impressive in a number of ways. It's impressive how much power you get for the cost. I think the flip side is it's actually not quite something that we could even consider implementing into our process. And I think there's a lot of clients that'll reach the same conclusion after they start working with it.
Why is that?
So a lot of how we help our clients is with things like trying to identify risk and trying to identify, sort of build up these different workflows for different parts of the financial process. And a really big part of that is related to trust. You need to be able to give answers that you're very confident in. You need to give answers that you can sort of deeply intuit where it's coming from. And I think one of the challenges of this model is that it has some very clear political biases right off the bat. So if I'm trying to use it to say, understand what my portfolio exposure is to China, it's going to be a challenge to use it for things like that. Also, a lot of the things we're most excited about are things like being able to do computer use, being able to sort of teach the machine how to like interact with different apps and things on the computer, image recognition, trying to extract out charts and things like that. And a lot of those kind of capabilities it actually doesn't really have, it doesn't seem to be as sophisticated in. So it can do very well in certain benchmarks, but when it actually comes to trying to apply it for at least most of the use cases that we're doing, it's not quite there yet.
What is there for you right now? Like what does work?
I think the most interesting thing for me is actually on the reasoning side. So of course, like one of the really big pushes OpenAI's had right now is like with O1 and O3. You've got these models coming in where, in theory, they can take a task, break it into subcomponents, and then start executing on those components. And I think in that area, it's actually quite good. I also think, just from a cost basis, it's extremely impressive what they've been able to do. There's been some controversy about exactly how much it costs to actually train the model. What I can confirm, though, is the actual inference cost, the cost of running the model, is extremely cheap compared to what you're getting with like O1 and O3. And so just the fact it's even possible to do that is a major technology breakthrough.
If nothing else, does DeepSeek just highlight the cost issue and potentially the movement down in costs of implementing AI?
Yeah, the way I tend to think about it is the cheaper it is to train AI systems, the more advanced capabilities you can train in the systems.
Looks like we lost your audio. Josh, are you there?
Yes, I am here. Can you still hear me?
Good.
We're good?
Okay, perfect. The way I like to think about it is the cheaper it is to train these AI systems, then the more advanced capabilities you can train. The more advanced capabilities you can train, the more use cases you unlock. The more use cases unlock, the more you actually see it accelerate. So I actually think this model will probably cause an acceleration in the capabilities of other models that are being built as more folks start to adopt it. So for me, I actually see it as completely positive.
What outside of DeepSeek and other models have you worked with that you did like?
So I mean, behind the scenes, we work with Anthropic models, we work with OpenAI models, we work with a bunch of fine-tuned models that we build in-house ourselves. I like to sort of describe it as an orchestra of different types of models. And one of the things we've sort of noticed is there's a lot of differences in capabilities. So something like the Anthropic models tend to be better at very long context window, where you're trying to handle like huge amounts of text. Whereas something like the GPT-4o models tend to be a little bit better at like foreign language and just sort of the general verbiage it uses as it's giving outputs. So we use a whole bunch.
How are your clients in the asset management business, Josh, using AI these days in these early days?
Yeah, so the way I like to think about it is we give them the ability to create this sort of team of little AI workers where you teach them how to do some kind of task, and then they're going to do that task on a continuous basis. So let's say you had to do something like write an investment thesis on a company, or let's say you had to do something like write an ESG report, or let's say you wanted to continuously monitor the world for any kinds of updates to something that might happen in the AI space. these are all examples of sort of workflows you can teach the system and have the system start to automate.
Well, we really appreciate your time. It was so good to get that perspective. It's good to kind of get the user mindset in for this, Josh. Josh Pantony, CEO of Boosted.ai on DeepSeek and sort of the pros and the cons there.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.